London Daybreak strategy. Now this strategy I've taught to thousands of investors from all around the world, and the end goal in mind is to be able to make 50 pips at least at a time when the trade works out. Now if you're a standard lot investor or an average pip size is $10, that's right around 500 US dollars. Now there's a huge upside to that because you can trade this on Great British Pound crosses. So the pound Aussie, the pound NZD, the pound JPY, the pound US, pound CAD, and so on and so forth. Now, this is not designed for the other crosses, so don't use this on like the euros, the JPYs, the US dollars. Do Great British Pound dominant on a 1 hour time frame. Now, the goal is to be able to make 50 pips. With a mini lots right around 50 US dollars, at a standard position right around 500 US dollars, but the goal is to become consistent. Let me walk you through how to apply the London Daybreak strategy, why this happens, and how you can duplicate this to where it can realistically, once you know what you're doing, many people will take like 15 minutes to set up their trades, and they do this one time, 15 minutes a day, and then they go on, they look to enjoy the benefits. So let me kind of show you how this works. In front of you is a Great British Pound NZD 1 hour time frame, and it's very important that you understand the concept. So the market kind of does a couple things. If it goes up, it's going to make higher highs and higher lows on the way up. And if it goes down, it's going to make lower lows and lower highs on the way down. And if the market runs sideways, it will kind of form equal lows and equal highs, equal lows and equal highs, and so on and so forth. So your job and my job is very simple. It's to find a low price to buy and find a high price to sell, or vice versa, whether the market's going up or whether the market's going down or whether the market's going sideways. Now, what's really amazing about the Forex market is that literally the market will form highs and lows around the same price points and or around the same times. And that's where the London Daybreak strategy really shines. So, for example, the first high or low of the day will form between 2 a.m. Eastern time and like 5 a.m. Eastern time. And what most people who utilize this strategy, they'll get up in the morning and they'll try to find whether we're forming low or whether we're forming high. So that's what we're going to talk about today. The opposite high or low forms between 8 a.m. Eastern time and like 2 p.m. Eastern time. There's a much larger gap in regards to the time frame on the opposite high or low, which makes it very challenging. Furthermore, you don't really get a directional push. It's more of a retracement. So we want to focus in on trying to find the first high or low. And if we can do this, on the low end, we're looking to make right around 50 pips. And on the higher end, we're looking to make right around 200 pips. So 50 pips to 200 pips of opportunity. Now think about this for a moment. If you can learn a life skill that could help you potentially make 50 pips to 200 pips at a time at a standard position, that's anywhere between 500 and 2,000 US dollars a trade. Now again, you can do this on the Great British Pound crosses and you get potentially a trade a day. So there's an abundant amount of opportunity. Let's keep going. I'm going to show you firsthand of the market U-turning between 2 a.m. and 5 a.m. And then also I want to show you and explain to you why this happens so that you can really take advantage of this in regards to the follow through of the strategy. Okay, so again, a little recap. We have a higher low that forms between 2 a.m. and 5 a.m. and then a higher low, opposite higher low that forms between 8 a.m. and 2 p.m. Eastern time. When you take a look at the live market, and we do this off a 1 hour time frame, what I went ahead and did is I highlighted the 3 a.m. Eastern time candlestick. Now you may say, well Josh, you know, the first higher low forms between 2 a.m. and 5 a.m. How do I know if it's 2 a.m., 3 a.m., 4 a.m., or 5 a.m.? Great question. Because this strategy in which I'm teaching you today is a very straightforward first base strategy, we're going to focus in on what's called the London Open, okay? And within a 24-hour period, there are three major sessions. You have the US session, you have the Asian session, and then you have the London session. The London session, or Bank of England, opens up right around 3 a.m. Eastern time. And what takes place is a surge. A tremendous amount of banking orders is processed. And traditionally, the market will form a high or low or begin to U-turn. So let's take a look at the Great British Pound NZD on a 1 hour time frame. And let's see what happens right around 3 o'clock in the morning. Now, if you want to begin to pinpoint the U-turn, whether it's 2 o'clock, 3 o'clock, 4 o'clock, or 5 o'clock, it's going to take a little bit more education. You got to know your Fibonacci's, buy zone, sell zone, support, resistance, candlestick formations, etc. So let me just kind of show you what happens right around 3 o'clock. So the blue highlighted candles are your 3 a.m. Eastern time candles. I just want to share with you and show you what the market does. Now, notice how the market forms a high, and then the market kind of pushes down bearish in this scenario, and then forms a low, and this morning we formed a high, and this scenario we formed a low, and then we formed a low, and then we formed a high. Now, this is not the holy grail, so we formed a high, did not really form anything there, just kind of kept falling, but formed a high, formed a low, formed a low, formed a high, and this area we formed a low. We were associated with the high in this day. We formed a high. We just kept falling bearish. And then we were a part of the high, which is there, okay? So what is taking place in this scenario? Well, you have to understand that when a session opens, specifically the European session, Bank of England, it's been stated that upwards of 70% of major bulk Forex transactions take place over the European session. And what takes place is when the session opens, all these banks are processing these huge exchanges, and it's causing a push up or it's causing a push down. Let me quantify for you how much the market surges either up or down starting around 3 o'clock in the morning, because once you see the opportunity, then you can kind of understand what we're trying to accomplish. So when we take a look at this day, we can begin to see that at 3 o'clock in the morning, the market fell about 117 pips within 3 hours. On this day, the market fell 56 pips within 4 hours. On this day, the market rallied 174 pips within 9 hours. On this day, the market rallied 117 pips within 5 hours. On this day, a huge home run, market fell 339 pips. What I'm getting at here is there's a monstrous surge, either up or down, and that's going to produce the opportunity for us. And so what you and I have to do is we have to look at the markets and we have to make a decision whether or not we want to buy or sell. And so this is how the strategy works. Write this down if you have a pen and sheet of paper. Around 3 a.m. Eastern time, okay, around 3 a.m. Eastern time, expect a high or low to form. So let's think about this for a moment. I'm going to illustrate this. If the market's going up and up and up and up and up and up and up, and right around, and now it's 3 o'clock in the morning and we've been going up, you're going to expect the market, the U-turn, to go down. If the market's been falling and been going down, and it's right around 3 o'clock in the morning, you're going to expect a low to form. And if the market's been going up, you're going to expect a high to form when it's right around 3 o'clock, and you're going to look to sell it, and so on and so forth, okay? So that's a big takeaway here. Let me walk you through some examples. So this is the market. We have this example. It's 3 o'clock in the morning. Market's been falling, it's been falling, it's been falling, it's been falling. 3 o'clock in the morning, we formed a bullish candlestick. Now, this is a bullish candlestick formation. It's known as an engulfing bullish. And what you and I need to understand is we are going to anticipate that this market is to go up. Why? Because we know between 2 a.m. and 5 a.m. the market forms a higher low. And so this could be the low of the morning. The 2 o'clock candlestick could be the low. And the reason why we believe that is the 3 o'clock candlestick is such a bullish candlestick, and we've been falling all morning long. We fell for 1, 2, 3, 4, 5, 6 hours, and then we hit a U-turn. So we would like to look to buy this market. It's very important that you understand the process of how this works. We're not just going to jump into the market buying because we could be wrong. We're going to place a pending buy order about 5 pips above. So we're going to place a pending buy. Here are the rules, okay? Pending buy 5 pips above the 3 a.m. Eastern time closed 1 hour candlestick. What that means is we will not be physically buying this market unless we cross over that green line or touch that green line. This can be done automatically. Your stop, which is an automatic exit for loss, will be placed 5 pips below the 3 a.m. low. So 25 and that'll be 20, okay? So your stop, write that down if you don't have it, your stop will be 5 pips below the 3 a.m. Eastern time candlestick, okay? Candlestick is the low of the 3 a.m. Eastern time candlestick. The risk, if we measure from the potential entry to the stop, is 46 pips. So in this scenario, our risk just so happens to be 46 pips. Now look, your limit will always be at least 50 pips. And so in this scenario, we have a risk of 46 pips, and we need the limit to be 50 pips. Now, if the risk was like 70 pips, then we'll go 1-to-1. So because if it was a 70 pip risk, we would have a limit of 70 pips. But because it is a 46 pip risk, our limit will default at 50 pips. So let's measure out 50 pips. So we have a limit from the entry to 50 pips away, which will be 9018. So we'll go 9018, 9018. And so the limit, which is an automatic exit for profit, is 50 pips away. We're going to walk through what takes place, but once you have this set up, everything's done on autopilot. For most people, what they do is they get up, they spend 10 to 15 minutes, they set this up, and then they go enjoy their day. They either go back to bed, depending on your time zone, or they get up, they go do something different. Usually, by the end of the day, you find out whether you've been limited out or stopped out. Let's see what this happens. We're going to go candlestick by candlestick. So each candlestick represents 1 hour of trading. We have 1 candlestick, 2 candlesticks, 3, 4. Our 4th candlestick enters us in buying. So we are now physically buying this market. The reason why I know we're physically buying this market is because we crossed or touched our pending buy. So our pending buy now becomes the market buy. And again, this can be done automatically through your broker. Now, if the market falls and hits the red line, that's our stop, we will lose 46 pips. If the market rallies, hits the green line, that's our limit, we will make 50 pips. Within 1 hour of being taken in, we make 50 pips. So 50 pips is equal to $500 US with an average pip size of $10. So thinking about that for a moment. You placed your orders, took like 10, 15 minutes, and you walked away, and within 1 hour of being taken in, you make 50 pips. That's $500 US with an average size of $10. Okay, 1 day, 1 trade per currency. This day is over, so we'll delete, we'll delete, we'll delete, we'll delete. Let's look at the next day. So we're going to wait for the close of the 3 o'clock candlestick. Now you may say, hey Josh, if I would have held on to my trade, I could have made so much more. That is true, but you're learning a first-base strategy. You're not learning how to hit home runs right now. If you want to learn how to hit home runs, you got to know your Fibonacci's, your larger time frames, smaller time frames. You got to know support and resistance, kind of like the technical approach, as well as fundamentals. Okay, so remember, 3 o'clock in the morning, you have a huge percentage chance that the higher low is going to form. The market's been falling all morning long. We are going to look and expect a low to form and a surge to go up. So I'm going to place a pending buy order 5 pips above this high. So 20. So we have 30. We'll call it 35. Okay. So I'm going to type that out. Pending buy will be 5 pips above 3 a.m. Eastern time closed candlestick. Okay. Now the stop is going to go 5 pips below the low. So 83, 80, 78. So my stop is going to go 5 pips below 3 a.m. Eastern time closed candlestick. Okay. Now my risk just so happens to be how much? From the potential entry is 55 pips. Now remember, so this risk is 55 pips. Now remember, your limit is always at least 50 pips. But if your risk is greater, then it goes 1-to-1. Because the risk is 55 pips, our limit will now be 55 pips. So let's see what happens. So we're going to go from the entry to the limit of 55 pips of 8990. So 8990, 8990 will be the limit. So in this scenario, the limit will be 55 pips. Okay, let's see what happens. Each candlestick represents 1 hour trading. Within one, we're taking and buying. So we now have an active buy trade. So we are now long. So the pending buy is now a market buy. And again, this can be done automatically for you. So you're buying the market. We're 1, 2 hours into the trade, 3, 4, 5, 6. So we're 6 hours into the trade. We hit our limit. We make 55 pips, which is equal to 550 US dollars. So let's think about that for a moment. Yesterday, we made 50 pips, which is 500 US dollars. Today, we made 55 pips, which is 550 US dollars. So we're just over 1,000 US dollars net within 2 days. So let's keep going. We get 1 day, we get 1 trade per day per currency pair. And again, you can do this on like the pound NZD, the pound yen, the pound US, the pound Aussie, the pound CAD. And as long as it's Great British Pound crosses, that's what you want to stick with. So let's take a look. Let's delete this. Let's delete this. Let's delete this. And let's look at the next day. Okay? Now, again, we're going to go to 3 a.m. Eastern time, kind of see what's going on here. Bingo. Okay. So we have 3 a.m. And remember, if the market has been going up, right? If it's been going up, you want to expect a high to form and the market to fall. If the market has been going down and it's 3 o'clock, you expect a low to form and the market to go up. Why? Markets move in waves that make higher highs and higher lows. And if you know a potential U-turn is going to form around 3 o'clock in the morning, if we've been going up and up and up and up, then you just kind of expect a high to form. If we've been going down, you expect a low to form. Make sure you follow those rules. It can realistically help out tremendously, okay? So in this scenario, the market's been going up. We're going to look for a potential sell. Now, we're going to place a potential sell 5 pips below, okay? So if it's 0, it's going to be 100, so it'll be 95 below, and then we're going to place a stop 5 pips above, okay? So 5 pips below, 5 pips above. 62, 67. So the stop will go 5 pips above, and then the pending sell will go 5 pips below. Now, it just so happens to be that the risk is 70 pips. So risk is 70 pips, which means the reward will be 70 pips. And we measure this out. We have the reward to be 9024. So 9024, 9024. And so the reward will be, the limit will be plus 70 pips. Let's see what happens. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20 hours into the trade, 21, 22, 23, we get stopped out. So in this scenario, we lost, and we lost 70 pips. So that's going to be 70 pips is equal to a 700 US dollar loss with an average pip size of $10. Now, we're still net profitable. We made 50 pips, and then 55 pips, and now we lost 70 pips. Let's move on to the next day. Here's the big thing with this. Whatever you do, do not give up because you had one losing day. That is a monstrous mistake. When traders have an amazing strategy and they have one losing day, they just go, I'm done. This doesn't work. That is not a fair assessment. I'm going to tell you this right now. Outside of equity management, success is a formula. It's not a fantasy. And understanding your formula will be one of the most important aspects of being a trader. For every 10 trades you place, you expect to lose a few of those trades and you expect to win most of those trades. Do not let a few losing trades railroad your progress, okay? So let's keep going. Let's look at the next day. Okay, so here we go. It's 3 o'clock in the morning. We've been pushing up and up and up and up. We have no choice but to expect the market to form a high because it's 3 o'clock. Let's place a pending sell 5 pips below, 9146, 9141. We'll place a stop 5 pips above. We're going to go a little bit faster here. 5 pips above, and it'll be 87. It'll be 92. The risk in this scenario is 52 pips. The reward will be 52 pips, which will be 9087. So 9087 is the reward. 9087, 9087. And that is a reward or a limit of 52 pips. Let's see what takes place. Okay, so within 1 hour, we're taking and selling, and we hit our limit. So we just made 52 pips, which is equivalent to 520 US dollars with an average pip size of $10. Okay, so let's think about this. 4 days, 4 trades, 3 winners, 1 loser. This is looking to be a really great strategy thus far. 50 pips, 55 pips, 52 pips. We got a loss of 70 pips, still net profitable. Let's look at the next day. Let's see if we can give it one more day. Let's see. Okay, so here's the next day. And it's the pound NZD on a 1 hour time frame. And we've been going down and down and down, and we're going to expect the market to form a low. And so we're going to place a pending buy 5 pips above. So it'll be 16.01. We're going to place a stop 5 pips below. And we have 91.75, 91.70. And so the risk involved in this trade is going to be 48 pips. So the reward will be 50 pips. So the reward will be 9271, 9271, 9271. We're risking 48 pips to make 50 pips. So our limit will be 50 pips. Let's see what takes place. Market rallies up, and then within 2 hours, we hit our 50 pip limit. And so 50, so let's type that out. 50 pips is equal to 500 US dollars with an average pip size of $10. Okay, let's add this up. So you have day 1, 50 pips, day 2, 55, day 3, 52. You have a losing day, and then you have another 50 pip winning day. So let's go to the calculator. And in the calculator, we have 50 plus 55 plus 52 plus 50 minus 70. That's 137 pips. 137 pips. 137 pips is 1,370 US dollars in 5 trades over 5 days. So think about this for a moment. If you're looking for a life skill and you're looking for something that's simple, straightforward, and right to the point, something that's not overly difficult, something that you can do part-time, 10, 15 minutes a day, and all you gotta do is just literally just say, hey, look, if the market's going up and it's 3 o'clock, let me set up for the sell side. If the market's going down and it's 3 o'clock, let me set up for the buy side. And within 5 days and 5 trades, you have 4 winning trades and 1 losing trade, and you make 137 pips or 1,300 plus US dollars. What else could you ever ask for as an individual? Well, you can do this as an investor on multiple currency pairs. The pound Aussie, the pound NZD, the pound CAD, the pound yen, the pound US, pound dominant currencies. I've taught this to thousands of traders, Try this out. It's simple, it's straightforward, it's right to the point. It's not overly difficult. You're gonna love it, and trust me and listen to me when I say this. Success is a formula. It's not a fantasy. There will be some losses, but there should be a lot of gains as well. And investors go on their way to be making potentially an extra $2,000 to $4,000 a month. And if they can do it, I don't see why you can't do it. Hopefully you enjoyed this video. Try this out for yourself. My name is Josh Martinez. Thank you so much for your trust.